Hi everyone, welcome to today's video, where we'll explore the tax implications of assignment sales in Canada using a practical example. If you're thinking of making a profit by assigning a real estate purchase agreement, you need to be aware of the taxes that come with it. Let's dive in. What is an assignment sale? An assignment sale is when the original purchaser of a pre-construction real estate property sells their purchase agreement to a new buyer before the final closing date. In many cases, the original purchaser or assigner sees an opportunity to make a profit by selling the unit early. This process is common with condominium units, where the time between construction and completion can be a few years. It's a great option if the assigner no longer wants the unit or sees the opportunity to make a profit. Example of an assignment sale. To help explain how assignment sales work, let's look at an example. Ringo signed a purchase agreement with a builder on June 1st, 2022 for a one-bedroom condo in Toronto, priced at $500,000. He paid a 10% deposit, which is $50,000, and the final closing date was set for September 1st, 2024. However, before the closing date, Ringo decides he no longer wants the condo. On August 31st, 2023, Ringo assigns his purchase agreement to Daniel for $600,000. Daniel also reimburses Ringo for the $50,000 deposit paid. So in this transaction, Ringo made a profit of $100,000 just by assigning the purchase agreement to Daniel. Tax implication number 1, HST on the assignment sale. Now let's get into the tax implications. First, Ringo will owe HST, harmonized sales tax, on the profit he made. In Ontario, the HST rate is 13%. So Ringo's HST liability will be calculated as 13% of the $100,000 profit he made from the assignment. This comes to $13,000. It's important to note that the $50,000 deposit Daniel reimbursed to Ringo is not subject to HST. Tax implication number 2, income tax on the assignment sale. Next up, Ringo will also need to pay personal income tax on the profit. Assuming Ringo is in the highest tax bracket with the marginal tax rate of 50%, he'll owe 50% of his profit in income taxes. So, profit $100,000, marginal tax rate 50%, personal income tax $50,000. That's a significant chunk of Ringo's profit, so it's crucial to plan for these taxes when considering assignment sales. Tax implication number 3, tax write-offs. The good news is that Ringo can reduce his income tax by claiming tax deductions for any expenses related to the assignment sale. Common deductible expenses include sales commissions paid to a realtor, legal fees, accounting fees, and assignment fees paid to the builder. If Ringo had a total of $30,000 in expenses, his profit would drop from $100,000 to $70,000. Therefore, his income tax would be reduced to $35,000. Tax implication number 4, input tax credits. Ringo can also reduce his HST liability by claiming input tax credits on the HST he paid for those expenses. If he had $30,000 in expenses, he would have input tax credits of $3,900. Ringo's final HST liability after input tax credits is $9,100. This reduces his HST liability, which minimizes the overall tax burden from the sale. Tax implication number 5, GST HST housing rebate. The last tax implication concerns the GST HST housing rebate for new residential construction. This applies to cases in which the original purchaser plans to live in the unit, and so they would be eligible for a rebate of up to $24,000. This number varies by province. However, in an assignment sale, the new buyer, in this case Daniel, has to reimburse the builder for the housing rebate at closing. This can be an unexpected cost for buyers who didn't plan for it, but the good news is they can claim the rebate later by filling form GST HST 190 with the CRA. Leveraging these tax implications. To make smart real estate decisions, you need to be aware of all of the taxes involved in an assignment sale. Whether it's HST, income tax, or potential deductions, planning ahead will help you maximize your profit and minimize your tax liability. If you're considering an assignment sale or want to ensure you're prepared for the tax implications, reach out to us for professional advice. We can help you navigate the process and make the most out of your real estate investment. You can find our contact information in the description box below. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe for more tips on real estate and taxes. See you in the next video.